Want to know how I bought a $2.5 million RV park like this with life insurance? You want to know how you can too? Well, I'm going to show you how. Check it out.
You'll have equity in that deal, so whenever that property sells, you will get that original investment back.
Hey guys, what's going on? Welcome to Millionaire Mafia. Really excited about this video today for a couple reasons. Reason number one, it's about buying real estate. And that would be good enough right there. But reason number two, it's about creative ways to buy real estate. And that's a match made in heaven right there. If you saw the video that I recently did on how my partners and I bought a 60-unit RV park right here in Pensacola, it was a really fun deal and a really cool video to make because it had a lot of history behind it, so to speak. I used to fly over this park all the time when I was with the Marine Corps, and every time I flew over, I would look next to me to the guy sitting on my right, and I'd say, I'm going to buy that RV park someday. And sure enough, we finally did. So that was pretty rewarding and pretty cool. The other reason why this was so fun is that we got to bring some really good investors along with us on the ride. We're going to make some money, and they're going to make a ton of money along the way. So it's going to be really cool. Now, it's always awesome to buy more real estate, but the way in which I was able to buy this real estate was just as cool. I used my life insurance policy to fund the deal. If you're an investor or wanting to become an investor, one of the hurdles that you're just going to have to overcome and figure out a way to work with is dealing with banks. They're a natural part of the industry, and unless you've got millions and millions and millions of dollars of your own money to dump into a deal, you're going to have to use a bank. And I'm not down in the banks. Yes, as I say hurdle, but what I mean by that is just something you have to deal with. As you all know, if you've gone through any type of loan, there's a lot of underwriting. You got tons and tons of paperwork. It's time intensive. You're going back and forth a lot of times. You're always asking for one more thing and all that kind of stuff. And that's just part of the process. They have to protect themselves, and they have to protect their investors that they have. So they're not just going to go into anything willy-nilly. And they have all the cards. At the end of the day, they kind of got you by the balls, and there's not a whole lot you can do about it. So you just got to deal with it. Or do you? What if I told you that there is a way to fund your deal in 24 to 48 hours at an extremely low interest rate without paying any additional fees or charges or points that would normally be charged by a bank and require zero underwriting to fund your deal?
Say what?
Even better, what if in addition to making money on the investment that you use the money for, you actually make money on the borrowed money? Think that's impossible? That sound too good to be true? Well, I'm here to tell you that not only is it possible, it's fairly easy to do, and you don't need to be uber rich in order to do it. And here's how. I've done an entire series already on how to use high cash value whole life insurance to bulletproof my personal wealth, as well as protect my family in the event that I die or am badly injured or unable to do my job. Now, I'm not going to go through and break down the whole policy and go through all the details on that because I went into very, very detailed explanation. And I actually did an interview with my good friend Tom Lonnie, and creator of the Bulletproof Wealth Strategy. What we did is we went over what high cash value whole life policies are, what his Bulletproof Wealth Strategy is, and then how you can use it inside of your personal business and your life to grow your wealth exponentially while protecting what you have. Now, you can check out the 4-part series up above, and I'll go ahead and link it in the description so you can go ahead and look at that at a later time. I highly recommend it. Highly recommend setting up a time to talk with Tom and work on bulletproofing your own personal wealth. But the gist of what a whole life policy is and how it's used to invest in real estate, just so we have a baseline here, is you put money into a policy, you build up what's called a cash value inside of that policy. You have protection up to X amount of millions of dollars in death benefit in the event you die. And then it acts as a very glorified savings plan that makes about 6.25% on the money you put in. And after several years, that money will continue to grow and grow and grow and grow to where it far exceeds what you've put into the policy, while still maintaining that amazing death benefit in the event something bad happens to you or even your loved ones, because you can get policies on them as well. What you do is you can use the cash value to take policy loans from the insurance company you have. I have Penn Mutual is my life insurance policy or company, and so I would actually take a loan from my life insurance policy. Think of it like a HELOC against your house. Okay, if your house is worth $200,000 and you own it free and clear, you can take a line of credit up to, let's say, 90% from a bank, so you can take up to a $180,000 loan to do whatever you want with it. It's very similar to the cash value. So the cash value, in the same example, has $200,000 worth of cash value in it. I can take a policy loan up to 95% with Penn Mutual, so $190,000 of that, and I can use that to do whatever. And it's very quick. It takes usually between 24 to 72 hours, depending on when I initiate it. If you initiate it on a Friday, it's probably not going to be there till Monday or something. But as far as business days, it's pretty fast. And then there's no questions asked. It doesn't matter what you use it for. And the great thing is you don't have to pay it back, because what will happen is if you die while you have an outstanding loan, your death benefit will be subtracted the amount that you owe by the insurance company, and then the remaining amount would go to your heirs. So if you had $1 million death benefit and you had a $200,000 outstanding loan, your heirs would get, or your beneficiaries, I should say, would get $800,000. So they still get money. That's the gist of how these life insurance policies work. That's pretty cool, because I'm making 6.25% on my money that's in my policy. When I take a loan from Penn Mutual, I'm lending that out at 5%. So there's about a 1.25% bump. So I'm actually making 1.25% on the money I borrow, which isn't a lot, but it's a hell of a lot more than 0.01% or whatever a bank is paying you right now. So it's not bad, but it can get better. And the way that I funded this RV park that we just bought was using my life insurance, but I didn't do it by taking a policy loan. You say, well, how did I do that? How did I take the money out of this policy without taking a policy loan? Well, I did what's called a cash value line of credit. And you say, well, Jake, you just said it's like a line of credit, like a HELOC. That's the same thing. You're just repeating yourself. Well, no, because I didn't take a loan from Penn Mutual. What I did is I dealt with a bank called Coastal State Bank. Now, there's a couple banks that'll do this, so don't think that they're the only option. They did a great job with me. I highly recommend them. What they do, it's similar to taking a loan from your life insurance policy, but it's different. And what you do is you actually assign your cash value to Coastal Bank. And then you take your loans directly from the bank and not Penn Mutual. And so this does a couple things, actually. While you have your money not loaned against in your insurance policy, i.e. with Penn Mutual, I'm making 6.25%. When I have money loaned out, I pay 5% on that. When I assign the cash value to Coastal State Bank and then take a loan from them, it's as if I never touched that money that's inside my life insurance policy. Penn Mutual doesn't think or even know that I took a loan, and they don't care because I didn't. Because what happens is if I were to not pay back that loan to now Coastal State Bank, they would take that same amount. Let's say I owed them $100,000 and I didn't pay it back, or I died, they would get $100,000 paid back to them from Penn Mutual, and then the rest would go to my heirs or be available for me if I was still alive. So it's essentially the same thing, except Coastal State Bank only charges me 3.25%. So when I talked earlier about how I actually make money by borrowing money, that's what I mean. I make money two ways. I take that line of credit, that policy loan, without actually taking a policy loan, because I'm using it through Coastal State Bank, and I'm taking it and I'm investing it in real estate. In this case, the RV park. And I took $250,000 and I put it took a loan from Coastal State Bank, leveraged against my cash value of my life insurance policy, and put it into this RV park. And then I pay 3.25% to Coastal State Bank, and it's paid on a monthly interest-only payment, which on $200,000 or $250,000, it's like $500 a month. And I'm making several $1,000s a month on the actual property itself, so it's more than paying for itself. Remember, I'm getting 6.25%, and I'm only paying 3.25%. So not only am I making money on the RV park, but I'm also making 3.25% inside of my policy relative to my loan. 3.25% isn't anything to write home about, but when it's sitting inside something that's essentially a glorified bank account, savings account, that's phenomenal. We haven't seen 3.25% since I don't even know when. I've never seen 3.25%, and I'm almost 40 years old, and I would imagine most people haven't. That is what is awesome about this policy and about this concept. Now, I mentioned I had $250,000 that I used. Well, I've had my policies for a little while, so and just like any interest-bearing account, I've built it up and I've added a lot of money over time. I've been successful in my business. I've been able to dump money into it. But what's great about this is you don't have to have that much in there. Now, it's more than zero. You have to have $100,000 of cash value to meet a minimum threshold for Coastal State Bank. So the first couple years with your insurance policy, you might not be able to do this cash value line of credit. But that's okay because you're still borrowing it at 5% and you're earning 6.25% on that money. And again, I'm using these numbers, specific numbers, but these may and will change depending on the current environment. But it's what the important thing is whatever you borrow it at is going to be less than what you're making. So you're always making money. It's just when I'm using this cash value line of credit, I'm making about 3 times as much, which is pretty incredible. So if you've never had a HELOC before on your personal property, basically what they do is they give you a checking account, and they either give you a literally checkbook with checks, or they'll give you a debit card or something like that you can use. And with Coastal State Bank, that's how this is. I have checks and I have a debit card. So if I wanted to go out and buy gas in the gas station, if I wanted to go out and I wanted to buy presents for Christmas, or if I wanted to go out and give to my local charity, I can do that if I wanted to using my line of credit. And they don't care up to the limit that I have. Now, again, every time I spend money on it, I have to pay interest on it. Yes, I'm making 6.25% in my insurance policy, but it doesn't, you got to spend it on stuff, or you should spend it on stuff that makes you money. So if you guys are sitting here thinking, man, I got to figure this stuff out. I got to know, what is he talking about with this bulletproof wealth stuff? What is he talking about with this line of credit? How is he buying these RV parks? Guys, I've done these videos, and I'm here for you guys. So go ahead and check out these videos. I'm going to link several of them below. I'm going to link the entire series on my interview. It's a 4-part series with Tom Lonnie with Bulletproof Wealth. He's got an awesome website that you can go check out and see a bunch of free videos. No commitments, no nothing. He's not going to call you. You got to call him, and his number is there. And you can check him out at www.bulletproofwealth.info. Check it out. You'll put in your name and stuff like that, and then you'll be able to get full access to all his stuff. But he can give you a lot of great information. He can go through your policy. He structures it. Each individual person is unique. Nobody's policy is exactly the same, and it's based off of not only what your current income is, what your current financial and health situation is, but also about where you want to go with your business and with your life down the road. Highly recommend you guys check that out. If you guys got any questions on getting into real estate and how to buy any type of property, guys, I've pretty much done it all. I've bought single family homes. I've bought small multifamily homes. I bought mobile home parks. I bought RV parks. I've bought storage facilities. I bought apartment complexes. I bought an office space. I bought Airbnbs. I wouldn't say I'm an expert at anything, but I'm pretty knowledgeable and I've got a lot of experience And if I don't know the answer, I'm happy to push you off to somebody who does. All right, guys. I hope you really liked that video. If you got any more questions on any of this information or want to see more on a specific video, go ahead and comment below. Hit me up directly. You can find me on Facebook. You can comment right below here. You can give me a call if you already got my number. If you don't, go ahead and comment below and I'll get it to you. No problem. I love talking about this stuff and I'm here for you. If you like the stuff that I'm talking about, go ahead and like this. Go ahead and subscribe. I'm going to keep putting videos like this that teach you not only how to create generational wealth, but how to maintain it. All right, guys. Until next time, here's to your wealth.